Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar brings us a relatively light schedule of significant economic events. However, we have a magnitude of events planned for today, with the claimant count change report from the UK standing out as the key economic release this morning. This report has the potential to create volatility in our sterling pairs. As always, stay tuned until the very end as we will be sharing our technical analysis for today on foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar experienced a dip, hitting a 3-week low following comments by the Federal Reserve officials. These remarks reinforce market expectations that the US central bank is nearing the end of its tightening cycle. Despite the smallest US job gain in 2.5 years, the Fed is widely anticipated to raise interest rates by another 25 basis points this month. Several Fed officials have expressed the view that further rate hikes are necessary to tackle persistent high inflation, but they acknowledge that the end of the current tightening cycle is drawing near. Shifting our focus to digital currencies, Bitcoin mining difficulty has been steadily climbing as miners compete to successfully mine the next block on the Bitcoin blockchain. With improving weather conditions in Texas, a major Bitcoin mining hub, miners are ramping up these operations, resulting in a new all-time high for the mining hash rate. Now let's turn our attention to what's happening on Wall Street. US indices rebounded, putting an end to a 3 consecutive session of declines. Investors are eagerly awaiting key inflation data and earning results scheduled for release later in the week. Major banking companies including JP Morgan Chase & Co., Wells Fargo & Company, BlackRock Inc., and Citigroup are set to announce their quarterly earnings on Friday. In commodity news, oil prices experienced a 1% decline due to increased expectations of additional US interest rate hikes. However, the losses were limited by crude supply cuts from top oil exporters Saudi Arabia and Russia. Traders are feeling nervous about the impact of higher rates on oil demand. Lastly, let's discuss bullion. Gold managed to hold its support level at $1,900 an ounce, as a weaker than expected non-farm payroll report weakened the dollar and raised hopes that the Federal Reserve is nearing its end of its rate hike cycle. However, Fed officials have emphasized the need to near-term rate hikes to address overheated inflation. Now let's dive into the highly anticipated technical analysis segment. Remember, our technical analysis scenario should be used alongside other relevant indicators and analysis tools. Considering the current market conditions, exercise caution, conduct thorough research, and make well-informed trading decisions. First, let's analyze USD/JPY. The currency pair is currently trading just above the primary support level. If the support holds and we see a close above 141, we could witness a correction back up to 142.1. Conversely, if the support breaks and we see a close below 139.8, we could anticipate a correction of the sell-off down to 138. Next, we'll shift our focus to the DAX analysis. The Germany 30 is currently in a correction pattern near the primary support level. A close below 15,600 could lead to further selling, while a close above 15,750 might bring about upside potential up to 16,000. Now let's analyze crude oil for today. WTI is currently trading just below the primary resistance level and above the diagonal support. If this resistance breaks and we see a close above 74.5, the commodity could potentially rally up to 77. On the other hand, a break and a close below 72.5 could trigger a correction down to 71. Finally, let's take a look at the analysis for gold for today. The yellow metal is trading near the upper boundary of the descending channel. If the channel holds and we see a close below 1924, a correction down to 1913 could be expected. However, if the channel breaks and we see a close above 1940, gold could rally up to 1966.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.